Let's dive into the one question that seems to be on everyone's mind, the Canadian housing market. Specifically, what's it going to look like in 2026? Is this the golden opportunity we've all been waiting for? Or is it a potential trap we need to steer clear of? You've seen the headlines, I'm sure. One day it's boom, the next it's bust. It's incredibly confusing, right? Well, today we're going to cut through all that noise. We're going straight to the source. We're talking about the latest forecast reports from Canada's Big Five banks to figure out what's really on the horizon. All right, here's our game plan. First, we're going to put the Big Five bank forecasts head to head. Then, we'll uncover this really surprising area where they all actually agree. After that, we'll get into the three key forces that are driving the market. And finally, we'll wrap it all up with a practical guide for you, whether you're looking to buy or sell. So, what are Canada's financial heavyweights actually predicting? Well, as you're about to see, their forecasts are, and this might surprise you, all over the map. I mean, just look at this. On one end, you have RBC being super conservative, forecasting just 0.7% growth. Then you've got TD and BMO. They're a bit more optimistic, calling for a 4 to 5% increase. But then, way out on the other end is Scotiabank calling for a 7% jump, pointing to a critical lack of housing. And then there's CIBC. They didn't even give a number, but they issued a serious warning about a supply crisis on the horizon. So really, it boils down to a tale of two forecasts. On one side, you have RBC, the cautious stabilizer. They basically think the market is just going to find its footing and cool its jets. But on the other side, you've got Scotiabank, the bullish supplier, who's convinced that the simple laws of supply and demand are going to inevitably push prices way up. Now, let's zoom in on RBC for a second. When you see a number like 0.7%, that sounds like a completely stagnant market, doesn't it? Like nothing is moving at all. But here is the twist. While RBC predicts basically flat prices, they are also forecasting an 8% surge in the number of sales. So what does that really mean? It means the market is about to get busy again. All those buyers and sellers who've been sitting on the sidelines, they are expected to jump back in with renewed confidence. The market isn't dead, it's just reawakening. So yeah, the numbers are all different. But if you look past the percentages, if you dig a little deeper, you find something way more important. A surprising consensus on the big picture. So, what is it? What's the one core truth that all five of these financial giants, with all their different predictions, actually agree on? Honestly, this is probably the most important takeaway from all of their reports combined. The market will not crash. Just let that sink in for a moment. Every single one of Canada's Big Five banks agrees we are not heading for some dramatic collapse in 2026. This is the single biggest point of agreement. The market isn't falling off a cliff. It's just entering a whole new phase. And this consensus really breaks down into four key points. First, 2026 is going to be a year of moderate recovery. Second, the number of homes being sold is going to increase faster than prices will. Third, you'll see detached homes and townhouses do better than condos. And finally, and this is the big one, the housing supply shortage is the single issue that's going to define this market for years to come. Okay, so now we know the what. Let's get into the why. What are the powerful forces working behind the scenes that are actually shaping these predictions? It really comes down to three key drivers kind of pulling the market in different directions. First, you've got interest rates. The banks all seem to think they'll stay relatively stable, which should prevent any crazy price swings. Second, the supply crisis. This is putting constant upward pressure on prices. And third, immigration. While recent policy changes are a big deal, their main impact on the home ownership market was, well, that's going to be delayed. And to really understand the scale of this supply problem, just wrap your head around this number from CIBC. New housing starts in Ontario are projected to fall by almost a quarter in 2025 alone. You know what that means? It means by 2027, 2028, the number of newly built homes hitting the market could be at a multi-decade low. And that brings us right back to the immigration question. RBC's analysis explains this perfectly with something they call the immigration lag effect. Their data shows it takes a new immigrant family 5 to 10 years on average to save up and buy their first home. So any of these short-term policy changes are going to hit the rental market first and hardest, not the 2026 home buying market. Okay, we've covered the data, we've covered the forecast, the big picture, but what does all of this mean for you? If you're even thinking about buying or selling in 2026, here is your action plan. So we're going to split this into two clear paths. For buyers, the analysis suggests a real window of opportunity is cracking open. The consensus seems to be that late 2025 into early 2026 could be a fantastic time to get into the market. If you're thinking long-term value, focusing on detached homes and townhouses is probably the smart play. And most importantly, your mindset needs to be ready for a moderately recovering market, not waiting around for a crash that just isn't coming. For sellers, the good news is the market is definitely active. But the challenge is that competition is about to get a whole lot tougher. Now, for sellers, this tells your whole story. Right now, only about 4 out of every 10 homes listed for sale actually sell within the first month. Think about that. For every 10 homes on your street with a for sale sign, 6 of them are still sitting there 30 days later. And that means one thing and one thing only. If you want to be in that successful 40%, your strategy can't just be good. It has to be flawless. Your pricing has to be razor sharp, and your marketing needs to be better than everyone else's on the block if you want to stand out and actually get that sale. So let's sum it all up. The Big Five consensus has given us a really clear picture. 2026 isn't going to be a dramatic crash. It's going to be a moderate recovery. Think of it as a structural adjustment, all driven by the one thing that will define Canadian real estate for years to come, a fundamental, deep-rooted lack of supply. So, the path ahead is a lot clearer now. The data has laid out the map. And the final question isn't really what the market will do, it's what you will do. Are you ready to make your decision?